Have you ever found yourself caught in that infuriating urban ballet, endlessly circling the block, maybe grumbling a bit under your breath, thinking, I'd pay almost anything for a spot right now? Well, that feeling, that almost universal frustration, that moment of desperation for just a patch of asphalt. That's exactly where we're launching our deep dive today. We're going to really challenge how you might see something you pass by every single day, probably without a second thought, the humble parking lot. Our mission really is to pull back the curtain and show you how these often overlooked spaces are actually, as our sources put it, hidden gold mines of opportunity, just brimming with untapped economic potential.
Yeah, and what's really fascinating here is that very frustration you're describing. It isn't just an annoyance. It's a powerful signal of latent value. It's a great example of how an everyday hassle, when you look at it through a different, maybe an economic lens, reveals some pretty surprising insights. So today, we're not just going to talk about this potential. We want to actually unpack the specific ways, the strategies that turn what looks like just a mundane piece of land into a pretty lucrative asset.
Okay, let's unpack this then, because most of us, I mean, myself included, we tend to see parking lots as, or well, exactly what they look like, a flat piece of asphalt, right? Some painted lines, maybe a pay station, lots of cars. It feels purely utilitarian, a necessary evil, maybe nothing more exciting than that. But our sources are suggesting there's this powerful financial engine humming away beneath those lines, a consistent kind of low-key money-making machine generating pretty substantial returns. So, okay, beyond just being there, what are the fundamental economic reasons that make these spaces such a surprisingly good business? How do they generate so much value from what seems like so little?
Well, it really comes down to a potent mix of, let's say, classic microeconomic principles and, honestly, operational simplicity. For you, the driver, it's all about solving an immediate, often urgent problem, but for investors, it's about capitalizing on that very problem. Our sources point to a few key things. First, you've got the low overhead and capital efficiency. I mean, once a lot is acquired, paved, maybe some basic lighting, automated payment systems, the ongoing costs are remarkably low, especially compared to almost any other kind of real estate asset.
Right.
Think about it. No complex HVAC systems to maintain, no fancy interior upkeep. Often minimal staffing, too, thanks to technology these days. The initial money, the capital expenditure for the land, sure, that's significant, but it needs far less continuous reinvestment than, say, multi-story building.
So it's almost like a set it and forget it kind of model to a degree. Once that initial investment's made, that makes sense for keeping recurring costs down. But what about the other side? The revenue. You mentioned constant, unyielding demand, and that really clicks with my first thought about, being willing to pay anything for a spot.
Exactly. And that brings us right to the second key factor, what economists call inelastic demand, especially for prime locations. In really crowded city centers or near big stadiums, concert halls, busy shopping areas, parking really does become like oxygen. People aren't just looking for convenience. Often they're actually desperate for it. They will pay a premium, sometimes a pretty hefty one, just to avoid wasting time, gas, and that sheer frustration of driving around in circles. This demand, it isn't super sensitive to price changes within reason, especially during peak times. Like if you're running late for a meeting or you just want to get to your dinner reservation, that extra $5 or $10 for a guaranteed spot, it feels like a small price to pay for peace of mind, right? Our sources show this dynamic gives lot owners significant pricing power. And that often leads to profit margins that are, frankly, surprisingly robust and stable, particularly when you compare it to the ups and downs in other real estate sectors.
Okay, that's a really powerful, consistent revenue stream, which is, exactly what investors are always looking for. And it makes total sense that willingness we all have to pay a bit more just to make a problem go away. So while most of us are just trying to park our cars, it sounds like some pretty savvy people and investment funds are seeing something totally different. And this is where it gets really interesting, shifting from just a simple service to a more sophisticated real estate play. You hear investors talking about these spaces not just as lots, but as genuine real estate cash cows. This different way of looking at it is clearly attracting serious money. So how does this investment strategy actually work? What makes it different from just buying, an office tower or a shopping center?
Yeah, this strategy, it's often called something like land banking with income. And it's a really smart, patient approach for certain kinds of investors. If we connect this to the bigger picture, what you see is a very savvy long-term real estate method. You're generating steady income while the actual asset underneath, the land, grows in value. Our sources talk about how specialized private funds and even some REITs, real estate investment trusts, are now dedicating whole portfolios just to this niche. They're buying up prime urban land, but not necessarily planning to build a skyscraper on it right away. No, they're specifically operating it as a parking facility first. And the genius part, it's like getting paid twice.
Paid twice.
Okay.
Okay, that definitely sounds appealing.
Yeah.
Walk us through that. How does that work?
Okay, so first, they get immediate, pretty consistent revenue from the daily parking fees. That's all those drivers, like you and me, paying for a spot day after day. This gives them a strong, reliable cash flow. It can cover their running costs and provide a steady return on the initial investment. That's the income part.
Right, the day-to-day money.
Exactly.
Yeah.
But the second payout, and honestly, often the more significant one, comes from the long-term appreciation of the land itself. Think about it. As cities keep growing, getting denser, developing, and as good locations become scarcer, the value of that raw land just keeps climbing.
Makes sense. Limited supply.
Precisely. So eventually, when a developer does want to build something bigger, maybe condos, an office building on that increasingly valuable, strategically located piece of property, these funds can then sell the land at a really significant premium. They realize substantial capital gains. So you're essentially running a profitable business on an asset that's appreciating in value. You're making money actively while you patiently wait for that bigger real estate windfall to materialize down the road.
That's a really compelling model, especially like you said in high-growth cities where land is finite and just keeps getting more valuable. But I imagine it can't be entirely risk-free, right?
Right.
What are some of the things these patient investors need to keep an eye on with a long-term play like that?
That's a really good point. And no investment is ever completely without things to consider. While that dual benefit model is strong, investors are definitely aware of several evolving factors. For instance, shifts in urban planning policies. That can really impact the long-term value. Maybe cities start prioritizing public transport much more heavily, or bike lanes, or even pushing for car-free zones in certain areas. That could potentially reduce parking demand over, say, decades.
Okay, yeah, policy changes.
Another big one is technological disruption. You have to think about the rise of autonomous vehicles, maybe, or even further expansion of ride sharing. A future where fewer people own private cars or where cars don't need to sit parked for as long. That could definitely alter the demand landscape. So yeah, while it's a robust strategy, it really requires foresight, a willingness to adapt to how cities and transportation might change. It's a nuanced long-term game, not just a simple bet on today's traffic.
That adds some crucial context.
Yeah.
It's not just about current demand, but really anticipating those future shifts in how we all move and live in cities, which actually leads us perfectly into the next evolution here. Our sources also suggest this isn't only about big funds buying up whole city blocks anymore. It's becoming a more dynamic space. We're seeing new technologies come in, even creative urban planning ideas. So how has technology maybe democratized this a bit? How can even small, seemingly insignificant bits of lands now generate income?
Oh, absolutely. Technology has really opened up this market, making it accessible even for, say, individual property owners or smaller businesses. Our sources specifically call out the impact of mobile parking apps. These apps have pretty much revolutionized how spaces get used and monetized. They provide real-time info on available spots, pricing. And they allow small lot owners or even, someone with just an extra driveway in a really good location to rent out spaces by the hour, by the day, whatever works.
Think about it. Maybe you own a small business with a little strip of land behind the building. It might have just been a neglected patch before, kind of dead space. But with these apps, suddenly it can become a micro parking empire, bringing in passive income every single day from drivers looking for quick, convenient parking.
That really is a game changer for those smaller spots that were just overlooked before, taking something that might have been an eyesore or just unused and turning it into a steady, pretty easily managed revenue stream. Are there other tech advancements beyond just the booking apps that are maybe boosting the value or the efficiency of these lots?
Definitely. The tech integration goes quite a bit deeper now. We're seeing smart parking systems things using sensors to detect exactly which spots are free in real time. Then they guide drivers directly there using digital signs or the apps themselves. That cuts down search time hugely and just makes the whole lot run more efficiently. Dynamic pricing algorithms are becoming more common too, so owners can automatically adjust rates based on demand time of day, maybe a big event nearby, to really maximize their revenue. And another growing trend is integrating EV charging infrastructure. Parking lots are becoming these vital hubs for electric vehicles. That adds another layer of service, another potential revenue stream. And it also provides valuable data on who's using the lot, when, for how long, which helps optimize everything further. So these advancements really transform a static piece of pavement into more of a data-rich, intelligently managed asset.
Right, so it's not just about finding a spot anymore. It's optimizing the whole experience, squeezing value from every square foot. This focus on efficiency also connects to another interesting idea our source material brought up, opportunity cost. What does that mean when we're talking about parking lots? And how are cities or planners starting to think about these spaces beyond just places to leave cars?
Yeah, this raises a really important question. Are we maybe underestimating how versatile these spaces can be? From an urban planning view, opportunity cost here is pretty simple. It means that an empty lot, especially in a prime location, isn't just sitting vacant. It represents lost potential, potential for other, maybe higher and better uses of that land. So if that land isn't generating the most value it possibly could, whether that's social value, economic, environmental, there's a cost associated with that underutilization. And that's why cities are increasingly looking at and encouraging what they call dual-use lots.
Dual use. Okay, tell us more about that. That sounds like a really creative way to think about city space.
It absolutely is. This is where a parking facility isn't just for parking 24/7. So, okay, maybe by day it functions as that critical parking hub, serving commuters, shoppers, people going to events. But then maybe at night or on the weekends, that exact same little square of asphalt transforms into something completely different. We're seeing examples where they become, say, vibrant pop-up markets or open-air event venues for concerts or local festivals, maybe even food truck parks.
Oh, interesting.
Yeah.
Some are even being designed with flexible infrastructure so they can quickly convert into like temporary community gathering spots or maybe outdoor movie screenings. The whole goal is to maximize the use and the revenue you can get from a single piece of land across different times of the day or week without needing more land. It really challenges that conventional thinking about land use, doesn't it? Pushing us to see these spaces as dynamic, adaptable assets, not just static, single-purpose plots. It's all about urban efficiency and getting the most out of every square foot.
So, okay, wrapping this up, what does this all mean for you, our listener? Well, it means the next time you drive past a parking lot, maybe you won't just see pavement and painted lines anymore. Hopefully, you'll see an area with surprisingly low running costs, incredibly high, often pretty inelastic demand, and the potential for those dual revenue streams we talked about, both the immediate parking fees and that significant long-term land appreciation. You're also seeing how technology is optimizing every inch and how creative urban planning is turning static spaces into dynamic community assets sometimes. It's really a complete shift in perspective, isn't it? Taking something mundane, a necessity, and seeing it as a tangible, potentially quite lucrative asset class.
Exactly. And the real value of this kind of knowledge isn't just understanding it academically, right? It comes from applying it, from having that refreshed perspective. What we've talked about today, I think, shows how looking closely at the everyday stuff, the things we usually dismiss as just background noise, how that can uncover significant economic insights and opportunities. So when you see a parking lot now, we hope you see past just the surface and maybe glimpse that hidden gold mine. And, who knows, maybe your next big investment isn't going to be in stocks or crypto or even real estate in the way you've always thought about it. Maybe, just maybe, it's a strategically located patch of asphalt, waiting for cars, waiting for new tech, and just waiting to make you money. It really encourages you, I think, to look for those hidden opportunities in some pretty unexpected places.